All right, so good evening and welcome to everyone who has taken the time to be here this evening. So, as our um, pre-training said, the flyer that we distributed was how you can buy your dream home, yeah, anywhere in the world with Horizon. So, just before I go into the nitty-gritty and begin to show you how you can make this money and how you can buy that home with Horizon, I just want to lay a few ground rules, okay? Number one is that Horizon is a decentralized protocol, okay? It's a decentralized project. It is a cryptocurrency, okay, on the blockchain, built on Binance chain, and it is currently the only project that is operating on what we call DeFi 3.5, okay? Now, because I do not want to waste your time, I am basically not going to talk too much. The biggest thing you need to know is that it is what? Decentralized, meaning that there are no humans in control. You know, when you have a human being, when you have a human being in control, you have greed, you have a CEO. CEO can close business if he has made enough profit. Okay. Human beings, you know what has happened in Nigeria, trusting in people. When the platform disappears, you no longer have access to funds. You can no longer claim your capital. You can no longer claim your funds. Okay. And when you invest in a centralized project, the bottom line is that the money is in the hands of people. The biggest difference you need to understand is that when you buy into a crypto project, your money is on chain, except you transferred your asset directly to their wallet. If you really did a decentralized crypto project, the money is on chain and you can always withdraw the money back to your wallet when you are ready to withdraw. Now, the only difference with a protocol is that there are mechanisms put in place, regulated 100% by smart contracts. And because it's regulated by smart contracts, there are a certain way that the smart contracts operate. If you do a contract and say you are staking your money for a period, when you stake your money for a period, you cannot take out that capital. However, in this project, you can always take out profit. And whenever the capital has reached its full term in terms of the contract that you did, whether it is 3 months, 6 months, or 1 year, you can take out your capital. Now, there's also options to put your money in what is called flexible, where your money is not in any contract and your capital can be taken out any day, your profit can be taken out any day. And we're going to come to that. But I just needed to clarify that the first thing you need to understand is that this is not a project that is regulated by human beings. There's no human control here. The power has been given to the smart contracts. So everything you're operating with code, you're interacting with code, you're interacting with blockchain code, you're interacting with mathematics. You're not interacting with human beings. Now, second thing you need to know is that on the blockchain today, there are different kinds of blockchain projects. Okay. When the blockchain started with Bitcoin many years ago, okay, the number one technology was what is called automated market maker. This is the technology that allows me and you to buy a token, sell a token automatically without any human being in between. This is also the technology that sets the price of a token automatically, okay, based on the money available in what we call the liquidity pool. This is a technology that makes all of that possible. It's called the automated market maker. Now, this automated market maker can be manipulated, which was, when the blockchain started, people were making money. And when scammers see as people are making money in anything, they begin to ask themselves, how can we manipulate this technology? What can we do to leverage this same technology for our own benefit? So scammers came on board and they looked at the blockchain, looked at the technology that was making a lot of people rich. They saw the success that, came on the blockchain, how many people became millionaires in dollars, billionaires overnight, almost overnight, okay, because of accepting and embracing decentralized finance. So what they did, they created a new method, or rather, they found a loophole. They found out that they can use this technological automated market maker to inflate price. And then when price is inflated, they sell. And when they sell, the automated market maker will reduce the price, unfortunately. And people who are still holding the currency will have a devalued currency in their hands, thereby losing money. Not that they take the money directly from the investor, but they use the investor money as a way to add value to the price. And when the price goes up, the value of their currency is like saying, I'm holding dollar. When the value of dollar goes up against naira, I can sell and get more naira. So let's see, when I bought dollar, the dollar was 1,000 naira per dollar. And then I now have a mechanism, a way, what I can do to make the dollar appreciate against naira and become 2,000 naira a dollar. And then I now go and sell at that value, okay, and make a lot of money. So that's basically what people now began to use on the blockchain to scam people, was called pump and dump. You take small money, put in something called liquidity pool, and then when the money is in the liquidity pool, you get people to come and buy. Because you have small money in the liquidity pool, as people are buying, the automated market maker will quickly ramp up the price of the token or the currency. And as the value of the currency is increasing, the people who bought earlier, the insiders who bought earlier and have those tokens earlier, now begin to sell their own tokens at a higher value. And when they begin to sell, the automated market maker would use that sentiment that, okay, they are dumping the token, they don't want the token anymore. When it sees that sentiment, it will reduce the value of the token. The value of the token will go down. And when the automated market maker does this, those people who did not sell early are the ones that lose money. So this became a technology that is called pump and dump. Okay? And you've heard of Shiba Inu, Dogecoin, Pepe, Trump coin. These are all very popular pump and dump projects. Insiders made money. People who sold early made money. People who bought early made money. Those who sold late, who did not hear early, who came in late, are the ones that lost money. Okay? Now, I will not have time to explain what is liquidity pool and all of that, because again, I'm trying to rush this meeting. Okay? But the bottom line is there's a technology called what? Pump and dump. So when you hear on social media, they are saying buying this token, buy this token, it's going to pump 10x, 20x, 100x. What nobody tells you is when to take out money. You hear when to buy, you don't hear when to remove. Okay? And because you don't hear when to remove, many times you just wake up in the morning, 9 a.m., and check and realize that you are holding the same number of units that you bought, but the number of units that you bought have lost value. That is the classic case of what is called pump and dump. Certain things happen for pump and dump to work. The developers need to have control over the liquidity pool, or they have to rent the liquidity pool money. If they rent money in the liquidity pool, if they own the money in the liquidity pool, then they can frustrate other people by taking out profit before others. Or the liquidity pool providers that gave money, that rented liquidity pool money to the project, can take out their own money and the project will still have a problem. So some group of guys came together, okay, they call themselves Olympus DAO, 4 developers that made themselves anonymous so that nobody would know who they were. These guys came together and created a new kind of project, a new kind of blockchain project. And the goal of that project was a project where liquidity pool could not be manipulated. The liquidity pool money could not be removed by rogue developers, by scam developers. And as long as the liquidity pool money cannot be completely wiped out, the price of the project can never get to zero. Because when the price of the project crashes, because liquidity pool money has vanished, nobody can do transactions anymore. What is liquidity pool money? The easiest way I will explain it to you is a bureau de change man. In Bureau de Change, what does he do for me and you? He helps us to convert currency. You go with dollar, you collect naira. You go with naira, you collect dollar. You go with dollar, you collect pounds. You go with pounds. So whatever swapping you want to do, you go to Bureau de Change. The Alaji is like the automated market maker. The money that he has, the capital that he has, is like the liquidity pool money. That capital, remember, he has it in multiple currency: naira, dollar, pounds, yen, different currencies. Okay. And then when you come as a retail buyer. Okay. You come as a retail buyer and you want to buy dollars, you have naira. So because he has the money to facilitate transactions, he can do that conversion for you. Now, assuming he borrowed money from from a politician, and the politician said, I want 40% per year on my money I'm giving you. And then the politician comes back 1 year later and say, we need the money for election. He has to let the money go. So when he lets the money go, let's say he collected $4 million from the politician, and that was the $4 million he had in multiple currency that he was using to facilitate transactions. Now, he cannot facilitate transactions anymore. That was the problem in DeFi 1.0. What these guys did in DeFi 2.0 is a technology where that money, that capital was given to the blockchain, was given to a smart contract. A smart contract became the holder and the owner of the smart contract, of the money. So that's why it's called protocol-owned liquidity. The owner of the money in the liquidity pool is the protocol, not a human being. So nobody can take the money back from the protocol. The protocol owns the money. And because the protocol owns the money is there forever, except the blockchain crash, which many of you know. The blockchain has been running without maintenance, without shutting down, without going on break, without going on transfer, without going on leave. Since Bitcoin was launched, it has not taken any break. There's not been any downtime. So for the smart contract to lose possession or for the money to disappear, the blockchain need to disappear because the smart contract is directly on the blockchain, is running on the blockchain. Okay, so Olympus DAO created this technology and it was called protocol-owned liquidity. And because there's always money in the smart contract called treasury, the project is not broke. The automated market maker will set the price at a good price, and the project can never be zero because the automated market maker, as long as it sees money in the treasury, it cannot set the value of zero to the protocol. That is the reason why this kind of project is able to survive bull market and bear market. Even if everybody remove money, because the protocol owns money that does not go anywhere, the price cannot crash to zero. Usually when the price is crashing, developers take out money, liquidity pool providers take out money, people that invested take out money, everybody takes out money, and the project crashed to 0.0000. But in this model, because the protocol cannot dump, it can't dump its own tokens. It must hold its tokens. The protocol cannot crash to a 000. Now, the goal, the meaning of that is that if you were minting that token, if you had a way to own a lot of units of that token over a period of time, you will be able to cash out no matter when you want to cash out. Anytime you want to cash out, you're able to cash out because there's always money to facilitate your transaction. So when Olympus DAO started, Olympus DAO was giving 100,000% interest return for anybody that bought their token and staked their token. Staking is a technology on the blockchain already that is working and has made a lot of people rich. Olympus DAO brought it and paired it with a protocol on liquidity, and it has made a lot of millionaires. Because of this model, price is more stable in this model. The value cannot go to zero. It enables the project to last longer. Olympus DAO has lasted 5 years and 4 months today. Okay. However, they had a challenge, and their challenge was that they were not able to grow quickly because it was impossible for them to tell a lot of people. That is why another company now came on board and brought referral mechanisms, ability to tell others about crypto projects. They just leverage on the existing technology of DeFi 3.0, which was referral mechanisms. In DeFi 3.0, people like Binance, Bitget, OKX, all these blockchain projects began to implement referral mechanisms. You see airdrops, all of these referral mechanisms came in DeFi 3.0. So another project, a DeFi 3.0 project, launched, which was Origin, and they used the same protocol on liquidity, but they brought in referral mechanisms. Okay, they just used the referral mechanism that was now available on the blockchain, things like dApps, to make it easy for people to invest, for people to buy the token without much complication. And they had amazing results. Origin has made more than 1,000 people $1 million each. It has made more than 100 people $10 million each, and it has made more than 10 people $100 million each. And everything is based on participation. What did they do? They were able to solve the problem of telling others about a protocol or about a blockchain business. So they took protocol on liquidity, added scalability, and had amazing results. The project still exists till today. People are still withdrawing, but all the protocol on liquidity projects had a limitation. They did not have good price control mechanism. In other words, when people begin to take out mass sums of money, the price will reduce. Okay, Olympus DAO traded up to, at the point they were trading at $1,000. Okay, but the price was devalued when a lot of people began to pull out a lot of funds. Okay, Origin traded at $70 plus. Okay, and the price began to devalue when people began to pull out $1 million, $500,000. When people began to take out this kind of money, the price began to devalue. So Horizon now took all these technologies combined: automated market maker of DeFi 1.0, protocol on liquidity of DeFi 2.0 to ensure that the project can last long term. Took scalability of DeFi 3.0, meaning the added referral mechanism. Because the reason why me and you did not hear about Olympus DAO that was giving 100,000% APY is because nobody told us about it. There was no incentive to tell other people about the project. I will not be on this Zoom call now telling you about this project if there was no referral incentive. All right, I will use my time for something that will be profitable. So you are hearing about this project because there's what? Referral incentive. So it took automated market maker, protocol on liquidity that guarantees that the project lasts long term, and scalability, and then it added artificial intelligence. Horizon is using AI to manage price of the project so that the price does not crash the way it did on all these other protocol on liquidity projects. Now, when you now check the price of Horizon for the last 1 year, which has never been seen on any blockchain project, that for 1 year, the price has been ranging. You will not see a project that has done 1 year where the price is ranging. This is why Horizon currently is ranked among the top 10 projects that are AI innovators. This is an AI innovative project as reported by the #1 blockchain security auditor that is called CETIC. So CETIC looked at the smart contracts and said, these guys are AI innovators. Okay, they are using AI on crypto in an amazing way. And it's important because AI is the future. And the owner of Tron said that more and more projects need to begin to come that are leveraging AI and crypto. Right now, there are only 15 projects spotlighted by the largest blockchain auditor, which is CETIC. There are only 15 projects in that category that are spotlighted as AI innovators. Horizon is number 7. So they are using AI to manage price. So unlike other projects, there are people like today I was hearing, there's a leader that is withdrawing 37 ORI every day. 37 ORI every day, let me do the mathematics. 37 ORI every day is 37 times what? 50, around that, okay? So yeah, times 30 days is what? The guy is withdrawing 55,000 US dollars every month from this project. And in fact, the total transactions on this project every month is like 10 to 15 million dollars. Every 7 days, sorry, is like 10 to 15 million dollars. Yet the price is stable. And I will take you to the blockchain. I will take you to what do you call it, coin market cap, and show you up till now the price is stable. 1 year later, price is still stable. Okay, so the four things that the project does differently is that number one, it is a minting project. How do you make money? You make money by buying the token and staking it. And when you stake the token, you earn an interest. You earn an interest. Okay. Somebody say, where are they getting the money to pay the interest? They are not getting money from outside to pay the interest. What they are doing is the project is minting. So in staking, if you understand blockchain, staking is where you put money down, you buy a token or you buy a coin or you buy a token and you stake it down. When you stake it, you are paid interest in that token. So the token is minted and rewarded to you the longer you hold. Now, if it's a project that has a good future, that basically means, can you imagine you were staking on Bitcoin? You know, I have a friend that was telling me how there was a project he did back in the day, and that they were mining Bitcoin and they were earning Bitcoin every day. And that the top leader was telling them, do not sell your Bitcoin, do not sell your Bitcoin, do not sell your Bitcoin. And he did not get it. He did not understand why he should not sell his Bitcoin. So he opened his wallet and he was showing me how he was selling Bitcoin. In fact, he even showed me how he was dashing Bitcoin. He showed me a transaction where he dashed somebody 1 Bitcoin. He dashed. He sent 1 Bitcoin to the person as dash to pay, to just take this one converter and just take care of yourself. He did not see how much Bitcoin will become in the future. Okay. Today, he does not have any Bitcoin. He sold all his Bitcoin. He ate all his Bitcoin. He said one of the leaders in that mining business, okay, held onto his Bitcoin. And one other lady, the lady that he was directly working with, he said the first man that was telling them, don't sell your Bitcoin. Don't sell all. Don't eat all. You see, the man has bought a private island in Japan. The other lady, he says she has real estate all over Dubai. She's not working. She's just living on her Bitcoin earning. Say she was earning 8 Bitcoin every day back in the days. 8 Bitcoin every day is what she was earning. That's the idea. You are earning Bitcoin, but you don't know that the value of that Bitcoin has potential to go up, because initially it did not look like it had the potential to go up. That's the same scenario we are having here right now. ORI is a currency, it's a token. You are earning ORI. When you stake ORI, you earn ORI. ORI is being minted and rewarded to you. Now, you can decide to sell all your ORI and convert it to cash and buy physical assets. Okay, the good news is that ORI has price mechanism. Unlike Bitcoin that was going up and coming down, ORI has price mechanism to keep the price stable. So you can decide and say, okay, you want to just eat all your Bitcoin, or you can decide, sorry, you eat all your ORI, or you can decide to keep some ORI for the future, because you don't know. The leader, the key developer says their vision for ORI is that ORI will get to 2,000 per unit. Now, I'm not going to talk much about that because a lot of us will not even believe that it will go to 2,000 a unit. But there's a lot of development that is going into this project, utility that is created for this project to give value for the people to use the project, to use the ORI, to use the token, so that the token can have value, because it is about use case and value. It's not about where they're getting money to pay you. No, they print the token and give to you, like they were mining Bitcoin and were generating Bitcoin every day. But what of if the value stays at $50? Or what of if the value goes to 100 or 1,000 or $2,000? How much richer could you be? We'll talk about all of that shortly. How do you, so what rates do the company use to pay you the ORI? We're going to talk about it, but bottom line is that interest rate is dynamic, it's not fixed. Okay, the rate of minting that the token will be minted and given to you is not fixed. Right now it's around 1,000% for people who do fixed, and it's around 222% for people who do flexi. Okay, we're going to break that down very soon. And the bottom line about this project is a sustainable model. It has been proven. Olympus DAO has done it. Origin has done it. WikiDAO has done it. All kinds of DAOs and protocol-owned liquidity projects have been launched, and all of them have broken that gap of failing, shutting down, or having a problem. Okay, so but the most successful have been the original model called Olympus DAO and Origin. And this project was built based on those most successful protocols. Okay, it took the best features of those protocols and then made it better, worked on the downside of those protocols, and added mechanisms to avoid the challenges those protocols had and created a much better model. So it's like saying you have an iPhone that has taken all the things they've learned about iPhone so far and have made a much robust model of iPhone that is powered by AI. That's what Horizon is. And Horizon has something called the Automated Market Regulator, which is what is responsible for managing the price, the balancing the demand and supply to keep the price stable. Okay, I'm not going to talk more than that, but that is how the price is stable. Okay, and then I'm going to show you Cetic very soon. Like I said, Horizon is on Cetic. On the blockchain, you don't say, do they have a license? It's decentralized. Decentralized does not use licenses. Decentralized means that government is not involved, regulation is not involved. Okay, so decentralized means there's no owner, there's no central governing body that is governing it, and government hand is not inside. So you don't ask a centralized project. You don't go and ask Bitcoin, where's your license? There's nothing like license. You don't go and ask Ethereum, where's your license? There's nothing like that. None of them have licenses. Okay. The people that need licenses are people like Binance Exchange. That's a centralized business that helps to manage blockchain crypto portfolio for people. It's a centralized business because they hold your assets, they hold it. So an exchange is centralized, but a cryptocurrency is decentralized. Okay. So decentralized meaning there's no human intervention. So how do you now fact check this kind of projects? On the blockchain, you have what is called auditors that audit smart contracts to check what are the risks behind those smart contracts, to check whether those smart contracts have malicious code with malicious intent that can be harmful to users. So Cetic is the biggest name in that game, and Horizon is not just on there, it is a spotlight project. Okay, it's a spotlight project. I'm not going to talk about the mechanism today. I just want to go straight to how you can make money on this project. Number one, you buy USDT, okay? You swap your USDT for the token, and then you stick your token on the DApp. Now, in this project, there's no back office, okay? There's DApp. Back office are for centralized projects where they need to control your money, they need to control your investment, they need to be able to pause your ability to withdraw, they need to be able to approve your transaction. Anywhere you see login screen, you are dealing with a centralized business. And centralized means that there are humans in control. That's why they need licenses, because they are holding your money. Okay, when you come to the blockchain, you are dealing with directly with smart contracts, so there's no license for anything. Okay, use an automated arrangement. So you stake it on the DApp, which I'm going to show you, and when you stake it on the DApp, you begin to earn. How much can you make with this project? Okay, as of talking right now, okay, you can, if you do what is called flexi, okay, flexi means you can take out your capital anytime, you can take out your interest also anytime. Okay, the value right now is around 2 to 4x, meaning 200% to 700 to 400%, because the APY is dynamic. Dynamic means that the APY fluctuates, it goes up and it comes down. Why does it go up and come down? Because Olympus DAO that manufactured this model, they claimed and they said that a business cannot guarantee a specific interest rate in bull market and bear market. In other words, when business is booming and when business is not booming, you cannot pay the same interest. So what their model does is that when business is booming very well and a lot of demand is there, the interest rate goes down. When there are less demand for the staking, the interest rate goes back up. That way to attract new investors. Okay, so it's a dynamic model. So the APY comes down, goes up. We've seen the APY come down to 1,000, then go back to 1,400, 1,400 plus. Okay, the APY adjusts as people are staking and unstaking and taking profits. So in Flexi, you can make 200 to 400% right now per year. Take note, is annual percentage yield. It's not per month. It's annual percentage yield. Okay, per month is around 0.02% to 0.04% right now as we are speaking. If you do fixed, meaning that you are doing a contract where your capital is locked down, okay? If your capital is locked down for 90 days, you're going to be getting around 0.04 to 0.08% every 3 days. So every 3 hours, okay, not per day, every 3 hours, okay? If you are doing every 3 hours, that's what it comes to every 3 hours. Now, if you are doing 180 days, it's going to be around 0.04 to 0.0, okay, 0.06 to 0.08%. Okay. If you are doing 180 days, the current, okay, APY right now will be paying you around 0.06 to 0.08% every 3 hours and 36 minutes. Okay. And then if you do 1 year, which is 360 days, the APY will be paying you 0. It's around 0.1, okay, to 0.2. So there you can be getting you probably be getting, okay, 0.08, yeah, to 0.10, 0.08 to 0.10 right now. That's what it is. So you'll be getting like 1,000% to 2,000%. 1,000% to 2,000% is where we are right now. I'm going to show you live. Basically, I'm going to take you to the back to the DApp and show you the actual current APY for each of the investment plans. Okay. But just before I do that, because I'm going to do that just after now, the other thing I want you to know is that part of what has been put in place to ensure that people cannot dump immediately and crash the price of the project, in addition to the AI buyback mechanism that manages demand and supply, the other mechanism to manage price, because in projects like Origin, people could just withdraw $1 million at one time. And when you pull out that kind of money in a project one time, the project will shake. So what they did here was, you can take out $1 million, but you break it down into 180 days, 150 days, 100 days, or 45 days, or 15 days. So the smart contract has discipline embedded in the mechanism. Now, this discipline was not in Olympus DAO. This discipline was not in Origin. All the projects that came before now did not have this discipline. So people just pull out huge sums of money and dump tokens. And because of that, the price slippage, the price moves sharply and changes sharply and reduces sharply. So on this project, in addition to the AI buyback mechanism, there is also a vesting mechanism that you must take out your profit daily. Your capital you can take out instantly, but your profit you must take it out daily. So it will be broken down into this number of days. And if you are going to take out without burning, you take out in 180 days. If you want to take out in less days, you must burn part of what you are withdrawing. You must burn. Burning is what Bitcoin is doing to keep their price high. So every 4 years, Bitcoin burns, okay, part of their supply, and also the amount of tokens, so coins that can be mined from Bitcoin, the hash rate, the rate at which you can mine Bitcoin, reduces in half every 4 years. Every 4 years, the hash rate cuts in half every 4 years, so that it becomes slower and slower and slower and slower to bring new Bitcoin into existence. And Bitcoin has a fixed supply of just 21 million units. Okay. Now, Horizon does not have fixed supply, but Horizon is using the buyback mechanism to manage that supply. So when people dump the token, what the buyback mechanism does is it goes and buys part of the tokens that are dumped based on the instruction from the AI and what the mathematics of the AI gives to it. It goes to the market, take money from treasury, and goes and buy token. When it buys those tokens, it's like a human being came and bought. So that's like creating demand. It makes the automated market makers feel as though, oh, somebody came to buy. Meanwhile, it's smart contract that bought. It's not somebody. Smart contract impersonated a human being and bought tokens. And then when this happens, the price is managed better so that the price does not fall. And then instead of printing new tokens, which is going to cause inflation, okay, it now stops printing new tokens and it takes what it already has to give to people that are staking, thereby creating scarcity at every point to keep the price good, creating demand, creating supply, creating scarcity at every point in a way that manages the price to keep the price good. Remember, the goal here in this kind of project, in blockchain, in crypto, is not where are they getting the money from. It is, if you give me the token, if you print the token and give to me, what is going to be the value of the token as at the time I want to withdraw? That's the most important question. How much will the token be when I want to withdraw? How much will the Bitcoin be when I want to withdraw? That's the main question. If the value of Bitcoin is high, when I want to withdraw, I'm going to be in excess profit. If the value of Bitcoin is 0.00000 when I want to withdraw, that means I'm in massive loss. You see the problem? All right, so part of this is what is used to balance the price. So if you say you want to withdraw your $1 million in 15 days, you are going to burn over $250,000 worth of the token. Okay, that is going to mean that you will not throw all the $1 million worth of token, you will not throw everything into circulation and scatter the price for other people. Okay, you will have to burn a chunk of what you're taking out because you want to take out the money faster. And that is profit, not your capital. Your capital, you take it out instantly. Okay, and the remaining profit, you take it out daily. Okay, you take it out daily, meaning you don't just pull it one time, you take it out daily. All right, so now I'm done with the basic part of the presentation. The other one is people who want to refer. If you wanted to refer, you can earn money also on this model. In fact, you can be earning as much as $2,000 to $3,000 or even $10,000 or even $40,000 to $400,000 every single month. Like the guy we just talked about who is doing, he's doing $55,000 monthly right now. He's in China, okay? And by the way, the project, the developers are in Singapore, okay? So basically, there are two ways you can earn money here. That is if you want to promote. Remember, you don't need to promote to make money. You can invest and make money. But in case you said, okay, I want to promote, what are the benefits of promoting? All right. And this is going to be my last slide before I begin to take you and begin to do practicals with you. Now, first thing is if you invest, let's say you brought someone that did $10,000 and the person earned $140,000 in a year. In other words, the APY was 1,400 and the person earned $140,000. You are not going to earn 10% of the person's capital. You earn 10% of the person's profit. Okay. Now, this profit is paid to you every day. It's not paid to you at the end of the year. It's paid to you every day. Every 11 o'clock, you are paid the profits. Okay. As the person is, remember, the mechanism is minting every 3 hours, 36 minutes. So every time a block is produced, okay, and paid to the person, you also, you're earning. So you earn, and then that your earning will be given to you every day by 11 o'clock. So you see your deposit of your interest. So, but at the end of the duration, you would have made $14,000 if the person made 140,000 USDT. Okay. Now, the second one is if you want to build a team, meaning you are open to building a team. Now, take note, this is still a referral kind of bonus, but it's a team bonus. This model, this business does not have level 1, level 2, level 3, level 4, level 5, and all those different levels, okay? It doesn't. It just has a basic team bonus. And these are the only two bonuses in this business. This one here says, if you have 2 people, you build only 2 legs, you know what, you refer only 2 people, and those 2 people, brought $10,000. Or they brought only $500 or $10, but they were able to, their referral activity or your own referral activity that in partnership with them generated a volume on their leg that is what? $10,000. Or the activity on the other person's leg generated $10,000 also. Now you can be going home with $2,000 to $3,000 every single month. Now, if you build 3 legs, in other words, you have 3 direct referrals, and you have the same case scenario where the volume of ORI generated in that their leg, okay, is $10,000, you could be earning 10 to 20%, which is $3,000 to $6,000, okay, per month. If you build 4 legs, in other words, you have only 4 direct referral, okay, you could be earning 10 to 25% in the same scenario. $10,000 on each of the legs, $4,000 to $10,000 every single month. And of course, if you are a heavy weight, you have a very good network and you know a lot of people and you're heavily connected, you can easily be making $40,000 to $100,000 per year. Now, if the legs are not balanced, of course, the earning will not be like this, okay? But if the legs are balanced, you are going to be smiling to the bank. So basically, it's going to reward performance and reward activity. Now, take note, you can build unlimited number of legs in this business. You can have 100 direct referrals, 500 direct referrals, but you will not earn as well as someone who decides to build a team and balances that referral, okay, into 4 direct referrals only. Instead of trying to refer 500 people with your affiliate link, you refer only 4 people with your affiliate link, and then you help the other 4 people refer other people, and then you keep helping other people. Everybody helps everybody to grow in just 4 legs, okay? And if your volume on these 4 legs is up to 10K, you can be going with 4K to 10K in US dollars every single month. Okay, so now with all of that said, I'm just going to show you one demonstration. How can I buy my house, Joseph? How can I buy my house? I'm very interested in buying my dream house. Okay, so I'm going to take you to the internet, and I want to show you something. Okay, so let's go to my calculator. Okay, so this is a calculator here, okay, that I created to help us postulate how much you can make. So let's say your dream house is $500,000, $500,000, okay? Let's postulate in dollars, okay? And you decided that, okay, you want to come in with $5,000, okay? $5,000, and you want to keep your 5,000. Okay, the price of the token today is what? Let me check the price. Let's check the price. What's the price of Horizon today? The price is 51.55. All right. So the price is 51.55. And the APY, let's check what's the current APY. How do I check? Okay. ORIZON.VIP. Go to the back office. Okay, not back office, to the DApp, sorry. So the DApp here, I say enter DApp. When I say enter DApp, as you can see, there's nothing like login. Rather, I can even connect my wallet. Okay. Anyway, so I'm going to come to fixed stake. So if I come to fix, the APY is going to appear here. So it's showing APY for 360 days. So that's the one I'm looking for, the APY for 360 days. Okay. So I'm waiting. All right, so it's 1,030%. Okay. So I'm going to take that 1,030 and I'm going to put it here. That's the current APY. All right. So if I hold this money for 3 years, this is it, 3 years, and the APY goes from 1,030 to 500 in 3 years, okay? Going up and down, up and down, up and down, and it is 500 in 3 years' time, all right? Now, that basically means that if I sell at, okay, the other worst case scenario is if the price of the token is $5. That means we are not being positive, we are being negative. Okay, we want to think like an investor that calculates worst case scenario, a venture capitalist that is investing money, and he doesn't want the scenario to be too good to be true. He's saying, okay, postulate the loss. If there is a loss option, postulating. Let me see. So I'm postulating loss options for you here. First loss option is if the price of the token is $5 in 3 years. Okay. In other words, all the utility that Ori has generated is not working, and people don't want the token. Everybody is just dumping the token. So the token has gradually reduced, gradually, and has come down to $5. Okay. Now, what are you going to make? You're going to make $212,000. Okay. If the token has come down to $20, how much can you make? You can make $849,000. And if the token if the token stays strong, okay, let me say 55, it stays strong and it is still ranging like it is ranging right now, like it has ranged for 1 full year, you can make your first $2 million. Okay, but let's make the matter a little bit worse. Okay. Let's say, okay, no. By the way, with $20, you've bought your vehicle, okay? So now let's say, okay, I put $1,000, okay? That means if the price is stable at 55, I can make almost $500,000. By the way, you actually make $500,000, as you can see here. You will make $500,000 or more. The problem is you're doing the vesting of 15 days. So you're going to burn almost 2,000 tokens is what you're going to burn. If you decided to say, okay, I don't want to burn 2,000 tokens, I just want to I want to withdraw 180 days. That means you can take out your full profit. Okay. So this is what $1,000. All right. That is $1,000 starting today. And you put it for what? 3 years. Okay, 36 months. But let's do another worst case scenario. Let's say that, by the way, this money has bought you at least you find a dream home even in Canada for this amount of money. In Nigeria, you find a very good home. This is almost like saying 800 to 900 million naira, almost a billion. You definitely buy an amazing house in Nigeria. Even with this money, you will find a house to buy. Okay. And even with this $56,000, you will still find a house to buy. This is just if the price is what? $5 at exit. Okay. But what if you now say, okay, Joe, what if I held this money for 5 years? In other words, when they are swearing in the president in 2027 to 20, that's 2032. Good. Okay, 2031. When they are swearing in the new president in 2031. All right. That's when I want to pull out my money. So that means you now say, okay, what if I do 60 months? Okay. 60 months with $1,000. Okay. And let us now put some more worst case scenarios. Let's say in 60 months, the value is $1. Again, worst case scenario. Okay. And let's say $5. Okay. Or let's even say $18. Okay. Let's do only worst case scenarios for this postulation. So if you start with what? Okay, no. The other worst case scenario here is, let us say that the APY also, nobody wants to take out their profit. Everybody is keeping for 5 years. So if everybody keeps for 5 years, the APY will really go down because nobody wants to unstake. Everybody is holding their money for 5 years. So if everybody is holding their money for 5 years, the APY will really go down. Okay. So let's say the APY goes down as much as 100%. But me and you know that people don't like long term. A lot of people want to withdraw their money in 1 year, in 6 months. Why? Because they are afraid that the project will crash. Okay, that's just human for you, because at least in Nigeria, a lot of people have had their fingers burnt, so people don't really have that kind of high expectation anymore. Okay, even as I'm telling you that Olympus Dow has done 5 years and 4 months, many people still don't think that no, I don't want to go that long. I want to take out money quickly. Let me cut my losses. Okay, so of course this is not even possible, because if people are taking out profits second year, third year, first year, the APY will still be good. Okay, so let me even say I keep it at 200. Okay, so if you come in with $1,000 and you hold it for what? 60 months. At $1, you can come out with what? $249,000. At $5, you're already $1,000,000 in profit. And at $18, you're stinkingly in profit. Okay. Now, the last postulation will be $500. Okay. And me, I normally say every child must have an account. Okay. Even with $500, at $5, you can still buy your dream home. At $18, you can still buy your dream home. In fact, even at $1, you still be holding at least 170 million naira. And me and you know, in this country, Nigeria, with 170 million naira, you will still buy a house in this country. Okay? A good one for that matter, depending on the area you're buying the house. Okay? So that's $500. Okay? And what if you decide to do $300? Okay? Again, you will still buy a home, even with this $74,000. It just depends on the location. Okay. So, but the point here is all of these are worst case scenarios. Let us say the vision of the developers are not fulfilled, but they achieve their goals by 10%, because right now there's ORIPay that they've just launched, which you can use to buy airtime, which you can use to buy what do you call it? You can use it to pay for your utility bill, like NEPA bill. I just bought tokens today like this from using ORIPay. So let's assume that you can use ORIPay, and a lot of people are demanding it, they are using it, and the demand is working. The card will launch, people are using the card. The payment gateway launches, people are using the payment gateway around the world. By the way, all of these, their implementations are implemented in more than 20 countries right now. Okay, so it's not a Nigerian thing. Okay, the developers are in Singapore, like I said. So let's say around the world there's demand for the ORI token, because people are using it for real utility. ORI trading is launching this month. With ORI trading, people are going to be able to trade things like Forex. So let's say they are trading Forex with the token and everybody is happy. People are using the token, they are making money with, they are using the token to buy, what do you call it? Buy the trading robot. And the trading robot is trading for them and is giving them profit, and they are loving it. And more people are buying the trading robot. And ORI is in demand. People are demanding ORI. Let's now say the price does not go to $2,000 that the lead developer is postulating. Let's say the price, okay, only goes up to, let's say the final, your exit price is, let's say, $100. Let's do $100 exit price. Let's do $200 exit price. Okay, $250 exit price. And let's do $500 exit price. Okay. Now, if you started today with only $300, and like I say, this is like the key developer is saying $2,000 is their goal. Now, if they achieve it by just 10, in fact, 5%, they achieve that goal by 5%, and ORI is stable at $100, how much can you make? Even your $300 will put you in a 7 million dimension. And remember, it's decentralized. In decentralized, there's nothing like you're withdrawing too much money. There's nothing like that in decentralized, okay? If you did $1,000, I mean, you could go anywhere in America and buy an amazing home. In fact, with this kind of money, you will not have any global restrictions in where you want to buy a home. Okay, you can basically just say you want to do the American visa, the one they call a business visa. You want to invest in America, and you just give them $1 million upfront. Yeah, yeah. Your quality of life can change. But again, I don't like all this kind of postulation, because again, I know that many people don't believe in themselves. Many people don't have a good hope. Many people are so used to bad things that they don't believe that anything good can happen to them. But what I want to say, before I begin to maybe close and take questions, is that when the blockchain started DeFi 1.0, so if I go to Google and say, give me a tabular comparison. Okay, no, yeah, this is actually one. Let me go and do another one. Let me say, give me a tabular comparison between DeFi 1.0 and DeFi 2.0 projects. So when the blockchain started, which is DeFi 1.0, a lot of people made money. A lot of billionaires were made. Okay, people who bought Ethereum, people who bought Bitcoin, people who bought Solana. A lot of millionaires and billionaires have been created until the scammers came. When the scammers came to town, they messed everything up. Okay, and they created a problem for everybody. And now it's very hard to find a good project. Very hard now to make money, okay, on the blockchain, because of ridiculous volatility. And that volatility is caused with what? What is causing volatility? Liquidity that is rented. Look at it. So for those of us who even think we are telling stories, look at it. DeFi 1.0 projects have what? User provided and rented. The liquidity is what? Provided by users and is rented via short-term incentive. So they give you a reward for bringing your money and putting in the liquidity pool. Okay. Now, this one, DeFi 2.0 projects, the protocol owns the liquidity via something called bonding mechanism. Okay. Capital efficiency in DeFi 1.0 projects is standard liquidity pool tokens that are locked with limited secondary utility. In DeFi 2.0, it is reusing the liquidity provider tokens as loan collateral and smart optimization. Risk protection, high exposure to impermanent loss and liquidation. You see, DeFi 1.0 project have what? High exposure to loss and liquidation. Now, DeFi 2.0 projects have what? Built-in impermanent loss insurance and self-repaying loans. See, insurance is in this system. Okay. Ecosystem rich. Here is mostly single chain. Example, early Ethereum congestion. Okay. Multi-chain and cross-chain by design. All right. Core examples, Uniswap, MakerDAO. And this is where I tell people, the fact that something is a DAO does not mean it is protocol on liquidity. Okay. But as you can see, Olympus DAO are the key guys for what? Protocol on liquidity. So this is a proven thing. In fact, like I tell people, if you go, okay, let me show you this one before we take questions. Okay, tabular comparison between pump and dump projects, which is the scam that Olympus DAO tried to stop. Who makes money on pump and dump projects? Insiders and creators. See, the people that scheme, the schemers, the orchestrators, the early whales, and the bots get the maximum financial reward. That's pump and dump for you. Who are the primary beneficiaries of protocol and liquidity project? The protocol community. The protocol and the community. Take note, long-term token holders. Long-term, so you cannot come into this kind of business model with a Ponzi mindset that you want to take out, you want to make $1 million in 1 month. That's not how this one works, okay? This one favors long-term holders because you need time to accumulate tokens and the tokens compound, okay? If the tokens compound, you have a lot of tokens. And because you have a lot of tokens, you can always withdraw in profit. Even if the price is less, you still make a lot of money because you have plenty tokens. Long-term token holders, the treasury, and the overall platform, okay, all of them are beneficiaries in this kind of project. Profit velocity, as you can see in pump and dump, they promise you can make money instantly, and it's true. It can yield massive exponential return in a matter of seconds, minutes, or days, you see? But also you lose money in a matter of minutes, seconds, and days, and many people have lost money. Here is gradual and sustainable. I'm not the one saying it. This is me. I just Google it for you. So this is Google. Okay. Gradual and sustainable. It accumulates value steadily over months and years via trading fees. So there's built-in utility called what? Trading fees and treasury growth. Okay. The more the treasury grows, okay, the more the value of the token appreciates if it has good use case. Okay. Now, capital control, you see, is centralized. Take note. Capital control in what do you call it, pump and dump project, which is DeFi 1.0, is centralized and hidden. Complete control remains with anonymous deployers, that is developers, okay, that can rock pool or drain the funds instantly. And when they do this, the price of the project crashes. Capital control. The capital we are talking about is not your money. The capital we are talking about is liquidity pool money. It's liquidity pool money that is put into the project like a bureau de change person to help facilitate buying and selling. That capital can be removed, and when it is removed, the price will be affected. Now, here is decentralized and what escrow. I hope you know what escrow means. Escrow means that it is locked. Okay? Escrow, if you know what escrow means, to say escrow. Escrow is that you lock money up. It's locked up. So it is decentralized. There's no human intervention and it is escrowed. So it is controlled by smart contracts. So the capital, the liquidity is controlled by smart contracts, multi-signature wallets, and decentralized governance, which is DAO. Okay? So a DAO Every DAO is not a protocol on liquidity project, but every protocol on liquidity project is a DAO. So controlled by smart contract. Take note, not by human beings. Market slippage, severe. Intentionally thin liquidity means small trades force massive volatile price movement. Take note of this. This is how you identify a scam project. A project that has small liquidity. Look at it. Thin liquidity, small money. You see liquidity pool with $5,000. That means that a small trade, someone that can just bring $10,000 and that will force the price up massively. It will force massive volatile price movements. That's how they pump it. That's how they pump the price. You put small liquidity of $5,000, people now come with small money. As small money is entering, the price skyrockets. Yes, and then the value that they are holding adds value. Okay, but here the slippage is less. You know why? Because the liquidity pool is deep, plenty money. $2 million, $3 million, $100 million, $200 million in liquidity pool. So it's deep liquidity. Permanent protocol liquidity. Take note. Permanent. The liquidity is what? Permanent protocol liquidity. Why is it permanent? Because it's controlled by what? Smart contracts. Ensures low slippage, stable trading conditions for everyone. Everyone can withdraw. Everyone can trade. Nobody's withdrawal will frustrate another person from withdrawing. That's the idea here. Okay. How long can it last? Ecosystem longevity. Here, pump and dump project non-existent. The project collapses permanently once the dump phase concludes, leaving retail investors with losses. What of protocol liquidity? Ecosystem is permanent, is built to endure. It prevents vampire attacks and it ensures that the project remains tradable indefinitely. Somebody, if you're here, type indefinitely in the chat. Indefinitely. I'm not the one saying it. This is Google. The project remains tradable what? Indefinitely. There's nothing like, oh, you cannot withdraw your money, blah, blah, blah. Nothing like that. Okay? Trading revenue allocation extracted by insiders. All profits are funneled out of the ecosystem to personal developer wallets. But what happens in protocol on liquidity? It's reinvested into the treasury. Protocol earns 100% of the liquidity pool trading fees to buy back tokens or fund developments. Oh my God, amazing. Look at it, participant mindset. The participant mindset of pump and dump is what? Gambling and speculation. Attracts high risk day traders looking to time the markets. Okay, it attracts high risk day traders. Sorry about that. Somebody is disturbing us here. Okay. All right. It attracts high risk day traders. See the problem? But what of protocol on liquidity? Investment and utility is for people looking for investments. Attracts long-term builders, yield strategies, and users focus on real product utility. So the question is now over to you. Which one are you? Okay. Indefinitely, yes, indefinitely. So if you're here and you have a question, you can now ask your question. I think we've I was going to finish by 9, so we are just 15 minutes late. So we can take 5 minutes and answer any questions while I also navigate here to what do you call it? Okay, for some people, let me just do what do you call it? Because I know some of my leaders are saying, Joe, please make sure you have a use case for $100. Let people know how much they can make with $100. Okay. Yeah, so if you do $100, but while I'm waiting for question, if you have a question, you can post it in the chat, or you can lift up your hand and I'll unmute you to ask your question. So if you put $100 today, okay, how much can your $100 be? Price of token is what? 51.31 that we checked. By the way, if you did not see the price, let me show you again. Look at the chart. Are you seeing the chart? Have you seen how the price has been for the last 1 year? Okay, 1 year, 1 year. All right. See, the price has been stable. Meanwhile, if you go to, let's say you go to the original model, which was Olympus DAO, you see that Olympus DAO had a hike. You see, they had a hike before they entered their stability phase. Okay, they had a hike before they entered their stability phase, and the price is still stable at what? $18.66, meaning someone that is holding 200,000 units can still withdraw at this amount of money 5 years later. Look at the project launched when? March 23, 2021. So March 23, 2021 is when the project launched. If you go to their website, you see, even now, they still have how much? $184 million in their treasury. And the back price backing for their token is that the token cannot stay below $12 for long. Once you reach $12, the buyback mechanism will kick in and bring the price back to at least $12 or above. Amazing. And that's the same technology we are talking about here. So 1,037 APY, okay? So for those of us who are saying, okay, you want to, how much can you make in a year? Okay, let's say you put $1,000, okay, and then you leave it for 1 year, okay. Let's do 1 year, 12 months, and you did fixed. So in 1 year, your price will still be around 50, 51, 52. Let's just keep it there. So this is what you can potentially come out with, okay? Depending on the use case here, you can come out with $6,000, you can come out with $7,000, and you can also come out with, yeah, $7,000 is what you come out with, okay? Actually, you're coming out with $9,000 to $10,000, but if you do 15 days vesting, you are going to burn some tokens. But if you decide to do full vesting, 180 days taking out of profit, you can actually come out with 9,000 US dollars, okay? So that's if you do 12 months with $8,000, all right? Again, but this is short-term thinking, short-term mindset, Ponzi mindset. If you do 24 months, okay, yeah, you are now looking at something more reasonable, okay? 24 months, let's say the APY has gone down to 700, okay? Or even say 600, all right? Yeah, now you're talking because now compounding is working in your favor. Now let me reduce the price. Let's say in that 2 years, okay, the value has gone to 25. Again, I just like worst case scenarios because I know, like I said, a lot of people, their mind do not think in terms of good. Their mind, human mind thinks mostly in worst case, worst case, worst case. All right, so yeah, 2 years, this is not bad. Okay. Question? Do we have a question? I see a question. How can I get started as a new beginner? Very easy. To get started, all you need to do is download Token Pockets on your phone. Let me show you. Yeah, I'm going to connect my phone here and show you what to do. You know, you just need to go to the App Store or Play Store, okay, and download Token Pockets. Okay. So what's Token Pocket? This is the app. This is Token Pockets, okay? You need to download this app called Token Pockets, okay? This is it. You download this app called Token Pocket, okay? And then you create a new wallet, okay? Create a new wallet, you know, give it a name, Horizon 1, Horizon 2, whatever you want to call it. You know, you say next. No, I already have Horizon 1. Let me just call this Horizon Demo, okay? And then it's going to ask you to create a unique phrase. Your recovery phrase is the most important thing. If you lose your recovery phrase, you've lost your money. Okay, here there's no customer support. On the blockchain, there's no customer support. Your money is on the blockchain. The blockchain does not have customer support. So you must make sure you keep your recovery phrase somewhere. So you say create recovery phrase, and it's going to ask you to copy your recovery phrase. Okay. So you could copy your recovery phrase, you know, click here, you know, click on confirm to copy. And then like I normally tell people, go and download Google Keep, okay? Google Keep, okay? It's a app. This is what the app looks like. So you download Google Keep, and then here you can come and create a new file. You call it recovery phrase. When you come here, you say my Horizon demo account recovery phrase. And then you paste it here, okay? You paste your recovery phrase here. Now, after you paste that recovery phrase, wait to, all right, let me keep it open. You go back to your, what do you call it? Go back to your token pocket, and now say check backup, it's now going to ask you to put that recovery phrase. So you need to go to that recovery phrase, look at it, jump, ashma, void, client, and rack. So where is it? Jump, ashma, void, clients, rack. Okay, go back. What is the other one saying? Exile, Latin. Okay, trigger, exile, Latin, pottery. Okay, trigger, exile, Latin, pottery. Okay, and then you now come, that's deal 20. Okay, that's deal 20. Okay, so they want to ensure that you know what you are doing, that you have your recovery phrase, that you understand the so, and by the way, whenever you want to now recover your money or open your money, if you have misplaced your phone, you just need that recovery phrase. So that's it, you're here. So once you get here, you're going to need a referral link. You need to get a referral link from someone, and then you click here, you come here. Okay, no, you're going to need a BNB. So anybody that is here right now who wants to sign up and you are able to do this in the next 24 hours, all you need to do is, whoever invited you, let the person get your BNB address and send to us, okay? And we will set you up, okay? I need your BNB address, this one, okay? So if I get your BNB address, so this is it, you come to receive, okay? Come to receive here, it will show the BNB address, okay? So you copy this BNB address, this one, okay? This BNB address, okay? You just click here, see here, you click here, copy. And once you copy it, you send it to us. If anybody that is on this call today that is interested in registering, between now and the next 24 hours, you get your wallet, you create your account like this, and then you copy this BNB address. We will give you free BNB, okay, to help you get started. And then you just need to buy USDT, okay. This is not a project where you put the money you can afford to lose, okay. This project put money with a plan. It's for people that have investment thinking. I want to buy a car. I want to buy a house. Okay. I want to invest in my children. I have accounts for all my children. If you look at here, all my children have accounts. Everybody has accounts. Okay. Joanna, Josephine, Wifey, Joel, everybody has an account. Okay. Put money for everybody. I'm not just telling you to do these things. And the good news about this project, like I said, is if people don't invest, hallelujah, we still make money. Well, we are still able to take out our profit, whether anybody invests or does not invest. Our profits, there are businesses where if people are not bringing money again, the business dies, and the people that are there can no longer make profit. No, 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 not this business. In this business, because it's currency, I am holding 100 units of a currency. Whether you invest or you don't invest, I can take out my 100 units of my currency, of the currency I'm holding. At whatever the price of the currency is at the time of exit, I can always take out my units. Okay, which is why I was giving you the worst case scenario. If the value has increased, has appreciated because of utility, because of use case, because of demand, because of ecosystem health, if the value has increased, I'm taking out a much higher value. But either way, the price goes up in this project, you make money. The price comes down, you make money. The price is stable, you make money if you hold long term. Amazing. Okay. There is no use case where you lose money if you hold long term. That's the cocoa. All right. So once you do this, I have BNB, you send BNB to us. We send your BNB wallet and we fund you. Number two is USDT. Okay. You are going to need to buy USDT again. You contact the person who invited you. Tell him I want to buy $100. He'll tell you how much that is. You fund, and they will help you to buy USDT. And once you have that, the next thing is a referral link. You come to Discover, okay, and then you come to here and you paste the referral link, okay. Once you paste the referral link here, okay, and hit enter, it will take you to the DApp. For those of us who have already on board, when you come here and you click, it will take you to the DApp. When you get to the DApp, you now connect your wallet, you click on join, it will set you up, okay? And anytime you want to access your money, it's the same thing. This is how you access your money directly from the token. That's why I'm saying everything is direct. It's you, your wallet, and your money. Okay, it's self-custodial. Your money is in your hand. You can take it out anytime. All right. So we have a video that explains this whole thing I'm just doing here right now, how to set yourself up if you want to set up yourself. But if you are open to having someone help you set up, speak to the person who invited you to this call. I am available also. You want to invest, we can do a screen share and we can set you up, we can guide you through the process. Okay. And the opportunity right now in this business is much. This is a very amazing business opportunity, and Nigeria has not even started anything in this business. It's just coming to Nigeria. Okay, so let us see how we can work together for those of us who want to, get on board in this business. Let's see how we can work together and, push the business, because the opportunity is amazing. And again, like I said, whether people invest or not, I'll still come out with my profit. In fact, if people don't invest, the APY remains high. Amazing. And you make more money based on the APY. People invest, you still make more money. People take out money, you make more money. Because if they take out money, the APY goes back up. Okay. If people say, okay, they are going to invest, then we that are promoting can earn based on referral earnings. Okay. So you can earn $10, $100, $200, $300 every single day, depending on how much input and how much investment you're able to attract, from your referral activities. Okay. So I don't know if there's any other question. And while we are taking questions, I'm also going to just go to. So by the way, I hope you saw this chart. Okay. Participant. And by the way, all of this thing like this is from Google. Oh. This is Google. Okay. Okay. The other thing I normally like to show people, if you go to the internet and you go and check for, say, Omega Pro, okay, see what is going to call Omega Pro. He calls Omega Pro a massive global Ponzi and pyramid scheme disguised as a foreign exchange and cryptocurrency trading platform. It operated from 2019 to 2023, swindled investors of more than 650 million US dollars and collapsed after freezing user withdrawals. Okay, false promises, MLM, exit scam, blah blah blah. Now, because now you are seeing this now because of all the reports that have come to the internet from 2019 to 2023 until date, because okay, this happened in a long time ago. Now, Olympus DAO also, okay, is a project that it's 5 years ago, okay, that it launched 5 years, more than 5 years ago. So 5 years in business, at least people should be saying you are a scammer, okay? Olympus DAO is a decentralized finance protocol that issues and manages OHM, a crypto native treasury backed floating reserve currency. It operates like a decentralized central bank. You see, decentralized central bank using innovative mechanisms to back its token with a basket of other digital products. Okay, it what protocol on liquidity, staking, bonding. They are the ones that brought all of these things to limelight. If you even go to AI mode self, I'll give you a different answer. Okay, so yeah, look at it. A decentralized finance protocol that functions as a crypto-native central bank to issue and manage OHM, a decentralized reserve currency launched in March 2021 by a founder named Zeus. Its core purpose is to create predictable, censorship-resistant currency that maintains its purchasing power without relying on traditional fiat money or dollar-pegged stable coins. These are all things you can check out by yourself. All right. Okay, so we're going to close this meeting by, 30 minutes now. Do we have any questions? While I'm doing that, let me just rush and go to SETIC. Okay, so look at SETIC is what? The largest security what? Blockchain auditor. The largest security blockchain auditor. Okay, if you enter SETIC, let me start by showing you Olympus DAO and confirm to you that Olympus DAO is what? 5 years and 4 months, as you can see. In the last 7 days, look at it. Olympus DAO has transactions of what? $22,000 in the last 7 days. Okay, this is a project that is what? 5 years and 4 months. All right, now let's look at Horizon. Okay, Horizon is what? 1 year of price stability, as you can see. And then how much has been transacted in the last 7 days? $10 million. And the price is what? Stable. As you can see, look at their rating. 82.32 is their rating. And if you come here, you see that there is Spotlight Web3 AI Innovator, and this is them on the list, 82.32. Okay, that's the rating, and they are on the list of what? AI Web3 driven innovators. Okay, so we've come to the end of this call. Please, if you have any questions, reach out to who invited you. You can drop your questions and your concerns and whatever you don't understand as a chat with whoever invited you. And once it gets to me, I will give an instant reply. And if we can do a video to answer your question, I will do a video and send it across. Thank you so much for coming. I love you, and I hope to see you. I'll come and dedicate your house or be in the party, the housewarming party when you buy your house. Okay, so do not put what you're willing to lose. Okay, put money that you know will change your future. Thank you so much. Good night.